In the old days in Las Vegas, the mafia was heavily involved in the casino business, and they were literally carrying out the casino profits in wheelbarrow loads. They'd sneak it out of the back door and send the profits to the bosses back home. Yet, the casinos still remained in business. Nowadays, the Las Vegas casinos are owned and operated by corporations. And while it is very rare for a casino to go out of business, it certainly has happened before. And when it comes to trading in the stock market, the two main reasons that traders blow up their accounts and fail is for the exact same two reasons: lack of strategy and risk management. The old adage, the house always wins, isn't strictly true either. Now sure, the stats do show a nice even return on investment for casinos, but in a sense, casinos are gambling just like their customers are. It's true, the casinos do have an edge on every game, but it's really not overpowering on many of the casino games. People win all the time at the casinos. I've personally walked out of Caesars with more than $10,000. This is called short-term variance, which is basically the randomness that can happen in a small sample of bets. However, if you play at the casino long enough, the house edge on every bet does guarantee that you as a gambler will lose in the long run. In short, casinos win on average and the players lose on average. Now, this may all seem obvious, but if you're a retail trader, the big difference in your overall success is largely determined by the strategy and risk management that you possess. Much like in poker, where one's skills and discipline will grant them long-term profitability, not luck. The secret to successful trading lies in understanding the game, and there are a lot of powerful lessons to learn from the casino business. In this video, I'm going to deep dive into the world of casino operations and discover the truths that can improve your trading performance. Now first, let's look at some common gambling myths and how they apply to trading in the markets. Because whether you're rolling the dice or trading stocks, myths and misconceptions are ever present. The secret to successful trading lies in understanding the game, and there are a lot of powerful lessons to learn from the casino business. Myth number 1, you can win by following a pattern. Yes, there is indeed a pattern that emerges at the casino tables, but it's random and unpredictable. So I have a friend who goes to Las Vegas at least 6 times a year, and blackjack is his favorite game to play. He's pretty smart and he knows all the rules and plays perfect blackjack strategy. He even goes as far as to pick tables with favorable rules, such as allowing resplitting of aces, 3-2 blackjack payouts, double or single deck, and dealers standing on soft 17s. However, he suffers from a fatal flaw that hurts so many gamblers, not just blackjack players. Let's say, for example, he sits down at a table and bets $100 and loses. Okay, fine, no big deal, it happens. He'll bet $100 again, he loses again. Not so great, but he's only down $200. So let's try it one more time, but this time, let's double the bet to 200 to get even. He loses again. 3 losses in a row? Well, that doesn't happen very often. He's due to get a win. So he bets $400 to get even all at once. A dealer draws a 5-card 21, and he's down $800. So what does he do? He takes out another $1,000 from his wallet and he bets it all. With a win here, he'll recoup all of his losses and he'll even be up $200. And no one ever loses 5 hands in a row, right? The next hand, dealer blackjack. Now, having played just 5 hands, he is down $1,800 from a base bet of $1,000. It's called the gambler's fallacy, and it happens all too often in casinos. The 2% house edge is based on players playing perfect strategy and making the same bet every single time. But casinos know that many gamblers see recent events and try to discern patterns from them. If the roulette wheel has hit black 5 times in a row, the odds of it getting black on a 6th time are exactly the same as if it had hit red 5 times in a row. Now, ultimately, 2% is based on perfect play. But humans are emotional beings. They often make bets based purely on their instincts. They chase hot streaks and they bet against cold streaks. They think certain outcomes are bound to happen based on an incredibly small sample size. But just don't tell a gambler that. You ever notice how casinos put up those video screens, the ones that show the past dozen or so results of a roulette wheel? Ever since they've started doing this, roulette profits have absolutely skyrocketed. People see that red hit 5 times and bet big on black. But why? Because the human brain is wired to recognize patterns. It's a survival instinct that dates back to our hunter-gatherer days. We naturally seek order and chaos to make sense of the world, but this instinct can betray us in contexts like gambling or trading. Now, the key here is to acknowledge this cognitive bias and pivot away from superstitious thinking. By understanding how our brains work, you can turn the tables in your favor by getting away from gut feelings or perceived patterns. And that brings us to myth number 2. There are lucky dealers and unlucky dealers. In a casino, players often attribute their losses to an unlucky dealer, as if the dealer has some mystical control over the cards that they're dealing. This is nothing more than superstition masquerading as strategy. You sit down at a blackjack table, you put down your money, and you get some chips. You lose the first hand, you lose the second hand, you lose the third, the fourth, the fifth, and the sixth. You throw up your hands in anger and you go to a different table and you vow to never play with that dealer ever again. You are also an idiot. You didn't lose because the dealer is unlucky, you lost because the cards just happened to be in a bad order for you in that particular shoe. That's it, nothing more. And this same phenomenon occurs in trading. After a series of profitable trades, you might be tempted to think that your next trade is more likely to succeed because you're on a hot streak. The flip side of this is avoiding trading after a string of losses. I constantly see people assign their poor performance to bad luck, instead of acknowledging they didn't stick to their plan. Now ultimately, this is nothing more than superstition and setting yourself up for failure. Now, understand that even I don't have a 100% win rate. I never expect to either. What I wholeheartedly believe is that I'm more successful than many because I have a predetermined plan and a risk management strategy. I know that if I follow my plan, I will win more than I lose. The monthly and annual gains do come with red days and drawdown, and even the casinos have red days. And I'm not just talking about a red day due to Danny Ocean stealing hundreds of millions from the Bellagio. They just have red days sometimes. That's how the chips fall. But in the long run, the casino knows that it has a proven model with systems and processes that are designed for profitability. They certainly don't go on tilt and get superstitious at the end of the day, but they will review the day to make sure that it wasn't their casino operations that were lacking. They don't change their entire business model. So why would you as a trader change your entire strategy or question everything you've ever done just because of one red day? And on the other hand, if you're attributing too much of your success to the lucky hours or using a lucky platform, remember that this can influence your results, but only because you're reinforcing cognitive bias, ones that don't stand up to the rational analysis. Ultimately, final outcomes over an extended period of time are the result of your decisions, your strategies, your skills, and your discipline. Nothing more and nothing less. That leads me to myth number 3. Bad players at your table increase your odds of losing. So let's go ahead and get this out of the way. No matter how poorly someone is playing at your table, your odds of winning or losing are the exact same. The only thing that matters is how you play. A good example of this myth is at the blackjack table. Have you ever been to a casino and seen everybody get pissed off when a newbie strays from the basic strategy? He might hit on a 16 and he takes the dealer bust card, and then all of the seasoned players moan and groan and give them the death stare. The bad player saves the table just as much as they kill the table. Basic strategy isn't some magic formula that's going to make everyone win. The dealer isn't supposed to bust when showing a 16. Now, don't get me wrong, if you're sitting next to some drunk idiot at the casino, that can definitely become a distraction. So just go ahead and walk away. And I get it, there's etiquette to consider too. And same goes for trading. You don't have to sit with other traders who are just not good company. But what I'm getting at here is that even if you are next to a bunch of newbies who are trading with a poor strategy, their shortcomings don't have to impact your results. Since the GameStop saga, an army of rookie traders have flooded the market, and they could have thrown off your game. It's common belief that these newcomers make erratic moves that mess with the market volatility, and in turn, your trading performance. But here's the truth. Much like the situation at the blackjack table, these individual participants are unlikely to impact your chances of success or failure in the markets. Markets are intricate beasts, influenced by so many variables far beyond the reach of a handful of inexperienced traders. You might be tempted to think, but what if these newbies trigger a selling frenzy and cause the markets to dip? Just relax. These traders are just as likely to accidentally boost the markets higher as they are to cause a dip in the markets. There's really no magic strategy that guarantees success, whether everyone adheres to it or not. The markets don't behave the way that they're supposed to. And then there's the hypocrisy factor that annoys me too. Many traders who point fingers at newcomers for disrupting the market are not exactly Wall Street wizards themselves. It's rare to find anyone who follows a perfect trading strategy. I know I've never been perfect either. So if you're quick to blame others for your losses, seriously take a moment to reflect on your own trading habits. And honestly, whether you're flipping cards at a blackjack table or navigating the highs and lows of the market, the key is to focus on your own strategy. The actions of other participants, skilled or not, are unlikely to have an impact on your bottom line, unless you let them.